Hey, good afternoon, everyone. It's 1:20. The market's just closed here on Wednesday. Let's just look at the price action real quick. And to get right to the point, I think we have tradable lows in place in corn and wheat. Obviously, the market's got to follow through and confirm that. But beans also look really good here too. So 3 quick time frames on soybeans, and then we'll jump to corn and wheat as well. Same time frames. First of all, this 3 bar combination here that we looked at over the last 3 days looked really weird to us because you've got this big outside day and a big outside day here with this little day that was up sandwiched in between them, right? So big outside day with a up bar in the middle. So we did some research yesterday. We've never seen that formation before, but it turns out it actually has a name, and it's called a bullish sandwich. So the market was pressing down in these 2 bars, unable to break out to new lows. Which reverted itself into a buy signal today. Now, we really want to see more action above this 1325 area here on beans, and obviously we want to see it take out these highs up here, and then that should put pressure up on this gap area up in here at 1375 to 1380. From there, we'll have to see. There's 2 different counts from here that this could be a wave 2 where we roll over and kill them. Or depends how this unfolds. If this unfolds in 5 waves, then it could be more bullish, and it really hinges on how big our crop is and whether or not demand shows up, right? So we'll see how the market unfolds over the next few days, and we'll take a look at and we'll help decide whether we're really bullish beans or whether we need to flip to bearish. Here's why we're bullish right now. We're holding the top of the cloud. We've got this nice little formation here. We've got a bullish engulfing day. We think that moves us higher. If you look at the 240-minute, you've got the same setup. We've chopped our way back to the top of the cloud and broke out the 830 bar here this morning. We think that leads itself to higher prices. And 3, it did the same thing here on the 1-hour bar or chart as well. So we're above the cloud on all 3. We've tested the top of it now, and we're reversing for higher. We think this looks really good, and we're expecting beans to work themselves back up higher. And we think we're seeing similar action here in corn as well. So let me jump back to corn. I'm going to add a bonus time frame here for corn, which is the weekly chart. And again, we've been looking at this wave, and let me see if I can find here's our weekly chart with the time periods overlapped. So this is where this 4th wave is equal to in time this 3rd wave. We've been looking at this for several weeks. We've been reversing at a longer term 61.8% retracement level, and we're in a wave 4 position here. So we're looking for strength up and out of here. I don't know if we can convert this all the way to a big strong 5th wave because the fundamentals do seem bearish, but stranger things have happened, and just when you think you can't get any more bearish and this crop can't get any bigger, something happens and the market turns for higher. It's exactly what would be in store for a crop that is or for a market that's ready to rock people because it's got them off balance. So that could happen here with we did make a baby new low here overnight. We were able to trade back and trade above this 481 level, which to us is really significant. That puts us bullish anything above 473. And supporting that is the force index with a big bullish divergence against from this move down to this move down here. Big bullish divergence on it. You've got a bullish divergence on RSI. You've got bullish divergence on stochastics. So all of those, in our opinion, will make it look more bullish than bearish, coming off of the big bad day yesterday where you really thought, man, the sky might fall out from underneath us. But that's okay. So where we are currently positioned is we're hedged. We're hedged with puts from higher levels after taking them off with futures. We have ownership re-ownership on up in here at the 550 level. So if we do get some strength and exuberance, that's fine. That position will make money, and we'll look to digest it. I'm hoping that it has a little bit more rhyme and reason to it than this nonsense that happened through here, because this was. It didn't act rationally, right? It would move up in nickels and it would drop in nickels. This move here has actually acted and behaved very rationally over the last few days, and market seems to have some rhythm to it, which is why we like this signal even more. Can this be a false buy signal? Absolutely, it can be, which is why we want to make sure that we're careful below today's low. But for now, all things look good on this chart. Now let's jump to wheat. I think wheat also scored a low here today. You know, it tried to press down into this lower area back from May, failed, had a nice reversal. We'd like to see more strength and more follow through, obviously, and really, you know, we're not going to get real confident in a higher move here until we get back up above this low at 760 and really back up above these highs here at 789 for Kansas City December wheat moving forward. So wheat's still got some work to do, but this is a good spot right here. And I think all eyes should really be on beans because they could get pretty exuberant, especially if we get in and find dryness or yield that starts to put some pressure on that carryout. In corn too, you know, there's a lot of talk about corn acres coming down because of the FSA and NASS data that's come out. And if that were to happen and our yield starts to tick below 175, then corn is back into the 1.5 range, which is supportive to prices. You know, it's not $8 corn, but it's definitely not 4.75 either. So, and we know wheat has some bullish fundamentals. So stay tuned. A lot left, a lot more time before these things are done for the marketing year, and I think there's plenty of reasons for them to go back up. And I don't think the trade will recognize it very quickly, so it could get fairly explosive. So that's our analysis for today. We'll see if that holds through the rest of the week, but we're looking higher in all these markets, and I think patience is really, really important. There's always risk trading futures and options, and you should only do so in light of your own financial condition. Be aware of your risk, manage to it, and keep yourself covered. Hope you guys have a great night. We will talk to you tomorrow or Friday, depending on market action. See you later. Bye.